frightening at the same time. Let's start. This is I'm uh, talking about an article from Reuters, and this article states, the headline says, "The Great Central Bank Policy Reversal Kicks Off." That is a headline that we have all been waiting for years, right? Reversal. That's what we're waiting for, the reversal of these rates. The Great Central Bank Policy Reversal kicks off. Now, here's the part that is a little bit frightening. I'll tell you. It says the world's biggest central banks are on the starting line of reversing a record string of interest rate hikes, but the way down for borrowing costs will look very different from the way up, and it certainly will look different because Switzerland is leading the way, not the United States. That is by far a great difference. But here's the real difference that could be frightening. The article states there will be no floodgates, there will be no fireworks. Instead, banks on opposite sides of the Atlantic are likely to move in the smallest increments with periodic pauses, fearing that ultra low unemployment could rekindle inflation rates still above their targets. So, what happens is unemployment is related to inflation in that in times of low unemployment, right, when unemployment is low, employers typically need to pay higher wages to attract workers, right? There's unemployment is low. There's a big pool, and the employers need to pay higher. The workers at this point have strong bargaining power, and this ultimately leads to higher wages. The hope is that higher wages then spin off. People are spending more money. They're buying more products, they're buying more services, the economy gets strong, right? So everything is good. But of course, the reverse could happen. And that's the frightening part, and that's why many countries, including the United States, are very fearful of this move. Now, for us as silver stackers, right, for us, any drop in interest rates is exciting for us because that means that people tend to move out of the dollar, out of treasuries, and the price of silver rises, and it certainly will. As this year plays out, I am feeling confident. You want my 2 cents? I'm feeling confident that there will be drops in here in the States, that this will play out in our favor. The interest rate cuts will go through, as stated this week, as 2024 plays out and beginning in 2025, they will start to drop, and that historically that shows that here in our silver stacking community we get a nice bump in silver price. And seeing how gold is playing out, this is going to be I see silver really going big. So this article continues. It says the bottom for interest rates is also set to be far higher than the historic lows of the last decade, and mega shifts in the structure of the global economy could put borrowing costs on a higher path for years to come. Central banks started to jack up rates from late 2021 as post-pandemic supply constraints and surging energy prices on Russia's war in Ukraine sent inflation into the double-digit territory across much of the world. And we've been living with this for some time now. The article states, this seemingly synchronized response tamed prices and inflation will be just above or already at the target 2% for most big economies this year. The bottom line is that across the OECD, central banks are softening up again or are about to do so. Investment bank Macquarie said in a note to his clients. This article states, indeed, the Swiss National Bank became the first major central bank ease policy on Thursday, 2 days ago, or yesterday, with a surprise 25 basis point cut to its key rate, as inflation is already in the 0 to 2% target rate in Switzerland. So this is really looking like other countries, other Western countries, I could see following this lead. And it really, I feel positive about this because the United States, everyone is not waiting for Jerome Powell to make that move. I'm excited to see these countries on their own taking this step. So this article continues. It says the move also ends rampant investor speculation that policymakers will be hesitant to move before the U.S. Federal Reserve, since any rate cut is certain to weaken a currency and push up imported inflation. That's what everybody's been biting their nails about, right? It's weakening the currency. The European Central Bank is bound to be next is bound to be next in June after incessantly repeated references to that meeting painted the bank into a corner, right? And the U.S. Already feel our Fed already feels like pushed into a corner, although Jerome Powell certainly is enjoying this power that the Fed has, where even just after Wednesday's meeting at the Fed, any statement that Jerome Powell makes, the stock market responds, right? Stocks either go up from what he says or they go down from what he says. I mean, it is an incredible amount of power for this one person, right, to have over the economy. I mean, just what he says completely shifts the stock market. Can you imagine having that power? It's really incredible and also frightening. This is another Reuters article. It says Swiss central bank cuts rates in surprise move, getting ahead of global peers. And this article tells us that the Swiss National Bank cut its main interest rate by 25 basis points to 1.5%, a surprise move which made it the first major central bank to dial back tighter monetary policy aimed at tackling inflation. The central bank, in the first rate decision since long-serving Chairman Thomas Jordan said he would step down in September, also cut its interest rates on sight deposits to 1.5%. The SNB's decision, its first rate cut in 9 years. Hear that, 9 years. Kicked off a busy day for central banks in Europe, with the Bank of England and Norwegian Central Bank also announcing their latest policy decisions. So I love to see this, because this shows that in Europe, other countries are really looking like they're going to follow. So as any cuts from these central banks in their interest rate, it's always great for us as silver stackers. We've been waiting. Silver has been stagnant for almost a solid 2 years now, really hovering between $22 and $24. Just to see it up around the $25 range in the past couple of weeks is exciting for us as silver stackers. So these moves, these moves that, even though they're not taking place in the United States, I see this as a absolute positive step for us seeing silver. And when I say us, I mean all of us that have been in this silver stacking game for years and years. And we know that silver moves up in a staircase, right? It jumps up, then it stays stagnant for quite some time. Recently, it's been almost 2 years stagnant, but it always moves up again, and it follows gold. Looking at how silver followed gold back when it first broke into the $1,000. In the $1,000 an ounce level. We were so excited to see that for gold, and silver. It took a while, but silver did eventually jump up and followed gold. And I absolutely see the same thing happening now, especially looking at all these moves. Gold hovering at about $2,200 an ounce, and these moves in Switzerland with interest rate hikes interest rates being cut down. I absolutely see this as silver really being pushed higher and higher.